My name's Flo Broderick and I work at CARTO, which is a location intelligence platform. And we work with a range of industries, one of which is predominantly financial services. Today, I'm going to be talking a little bit about some of the use cases that we're seeing most in fundamental investment research and private equity over the past year, because we've seen the use cases obviously change massively. And I'm going to jump into 4 of them. It's going to be very hands-on. I'm going to show the types of data that are being used and what kind of investment theses are typically being supported with our data and our technology. But yes, I want to just cover how the most innovative funds and banks are using spatial data. We do see a big difference from some funds to others. Some are really doubling down on the amount of data science talent that they're bringing into the funds. Moving away from kind of traditional tools and analysis to using a lot more data science analysis in Python, spatial modeling, and some of those cases I will show in this presentation today. So in terms of the PE lifecycle, where are we seeing most activity when it comes to spatial analytics? Well, if we think about the PE lifecycle in 5 steps, there are 3 where we're seeing obviously the most activity, 1 being sourcing, the 2nd being due diligence, and the 3rd being post-acquisition management of companies. And the cases that I'll show today are from different geographies and from those different phases. In terms of the main industries, at CARTO, when you think of spatial analytics, actually a lot of people think about the public sector, cities, urban planning, but actually at CARTO we're very focused on real estate, logistics, retail, and CPG. And so funds that are active in that space are doing more and more when it comes to spatial use cases. So I've just included some in a list here, but in real estate, we're seeing a lot around commercial and residential valuations, buy-to-let analysis, with the rapidly changing rules around tax breaks and legislation in different countries, seeing some quite big changes. Also green space analysis. So a lot of real estate funds will be using our platform to understand accessibility to green spaces and how that's going to change over the next 10 years. And there's a lot of talk about this with COVID, with so many people leaving big cities to suburban locations. And you know, it's a big change. And then also a lot of renewable energy use cases. So with so much activity, solar, wind, residential solar in particular, there's a lot of opportunity analysis being done there. Then on the logistics side of things, demand analysis. So if you think about last mile delivery, all of the different business models that we're seeing D2C, there's a lot of people wanting to understand, okay, how should I set territories? This is typically in the post-acquisition management phase. But if a PE fund has a portfolio company in this space, they're starting to make a lot more recommendations around using spatial modeling to plan territories and to understand synergies if you're potentially going to merge multiple logistics companies. Thirdly, retail, unsurprisingly, American Securities, one of our customers, do a lot of in that vertical in particular. They might be looking at things like white space analysis, revenue prediction, twin area analysis. So different flavors of the traditional site selection use case. And then the 4th example is CPG. So again, demand analysis, supply chain network design is a common one, and also point of sale analysis so that CPG brands can understand where they might have gaps in their point of sale network, and when rolling out new products, what makes sense from a merchandising perspective. So those are some of the main industries and use cases. In terms of the data, I'm sure many of you are familiar with using all of these different types of data. In fact, some of them were already mentioned in the Morgan Stanley presentation. But across these different use cases that I've mentioned, we're seeing growing usage of financial data, credit card transactions, human mobility, so foot traffic, road traffic for some of the more suburban use cases. That's becoming more and more relevant, both in out of home and retail, QSRs, demographics, then also behavioral data. So some geosocial data from providers like Spatial AI started to become very popular. Also real estate, housing data, the classic points of interests, environmental data, and then boundaries, and then also so much demand obviously to understand COVID-19 related data, whether that is data around social distancing, infections, how religiously people are following social distancing or not, and how that's evolving over time in line with vaccinations. We recently launched a vaccination tracker, which a lot of our financial services customers have been interested in, to understand the economic repercussions of vaccinations going faster in different geographies. So those are some of the data points that we would typically see in these analyses. And the first example I want to start with, I said I'm going to cover 4 today, is the buy-to-let real estate analysis. So in this case, we were working with a PE firm, and they used our platform to consider different investments in buy-to-let properties across different European cities. And they wanted to segment those properties according to the target demographics in different locations. Also depending on the type of yield that they wanted to have per property, they wanted to understand the potential to expand across different cities and what the market dynamics look like in those different cities, which is particularly relevant in a time where there's actually starting to be a lot more short-term rental demand for certain demographics and this new work from wherever situation that we find ourselves in. So this is an example of the analysis here, and I'm actually going to quickly switch across to show you this live. Let's hope we don't have any live demo effects here. But this example is somebody who's doing analysis to understand buy-to-let potential in the market of Madrid. So what they wanted to be able to do was see, okay, socio-demographic data, where are, if there's somebody who doesn't know Madrid on the ground, somebody working in an investment analysis use case, understand where are the more affluent areas of the city, and what does Airbnb and hotel demand look like in those areas, because that tends to be an indicator of what kind of area it is. Perhaps you don't want to go in the most touristy areas of the city. And they also wanted to be able to toggle on points of interest such as hotels and understand the volumes of hotels in different areas, and the capacity of those hotels, what kind of class are they in, and to be able to toggle those on and off and see also things like eating and drinking places, to be able to zoom in and see at quite a high granularity if I'm considering making an investment in buy-to-let properties in certain locations, be able to see that on the map and very quickly carry out a visual analysis of the city. And what you can see actually is that you can zoom in and see the different brands and see, would this be a good area for us to invest in based on the price of the property in those locations. So very typical use case. You can also toggle on shopping places, tourism interest places, toggle off. And it's a very easy way within CARTO to just bring in those POIs, bring in the socio-demographics from our data observatory, which is available as part of the platform. So that's use case number 1. I'll go back into present mode here. Use case number 2 is the quick service restaurants who are considering reformatting and consolidating. So in this case, a PE firm is looking to guide a post-acquisition, a QSR brand that they have in their portfolio to make better informed decisions on reformatting. So when I talk about reformatting, it might be turning into a curbside pickup location. Sometimes it can be turning into a more premium location, as many of the QSR firms are trying to evolve with the times and move towards some of the healthier trends that are out there, and the want from the customer to support smaller brands. But they needed to consider competitive footprints, including sites from 8 different competitors, which we have randomized for the purpose of this demo that I'm showing you today. But they also wanted to factor in how is COVID affecting consumer behavior, and how over time might that change as vaccinations ramp up. So where were restrictions affecting sales more or less? So in this case, again, I'm going to hop across because it's better to see these things live. Here we can see an example of an analysis in a city in the US, and we can actually see total visits to different QSR chains, and also see which areas based on SafeGraph data, which many of you might already be using, but it's essentially patterns and visits data for physical locations. But we can actually see which areas are following social distancing more or less, and how might that affect people actually leaving their house in a vehicle to go to a drive-through? Are they more likely to go to a competitor in another location? How does that behavior evolve as lockdown restrictions are eased or increased, etc.? And here they can see kind of those catchment areas to those different locations, and see what the visits were during the month of November 2020 using SafeGraph data. So again, a very quick and easy way to understand, okay, what's catchment, what are the catchment areas of locations? If we were to buy 2 QSR firms, we want trying to understand synergies, to be able to see that very quickly on the map. feed that data into a simple solution like this to show perhaps to the portfolio company or for internal analysis. And many of our customers, by the way, as data scientists, visualize this kind of stuff straight out of their Jupyter notebooks. So they might be doing their spatial modeling within a Jupyter notebooks, and they will use our Python package, which is called CARTO frames, to achieve these kinds of dashboards directly within the notebook. So yeah, that was the second example. Do feel free to ask any questions in the chat along the way, and I'm more than happy to chat with anybody who's got further questions after the presentation. But the third example I have here is, again, catchment area analysis for delivery pickup points. So this is a really interesting one, I think, and it's in the logistics vertical here. So in this case, we're looking at a fund who's trying to understand the locker footprints of existing logistics firms in the UK during the due diligence process. So they wanted to understand how much of the urban population of the UK has walking access to different types of pickup and collection points. Because pre-COVID, actually, it was a big issue that there were so many failed deliveries from the kind of DPDs, DHLs, FedExes of this world. We weren't in our home locations to receive packages. It's obviously changed a lot with so many of us stuck in bedrooms working at home. But again, this is something that's, hopefully we're starting to see the light at the end of the tunnel, and we won't be able to receive our packages again soon. But this fund wanted to understand the potential future demand for such services based on e-commerce propensity. So obviously, the segments of the population who are more likely to use e-commerce are different in different locations. So in this case, again, I'm going to hop across to a live demo. And in this case, we're actually seeing deliveries for a certain logistics firm in the UK. What we can see is that right now they'll be using a network of stores, so convenience stores, or off license as they're often called. And you can see, okay, how much population is covered in the catchment area of a store, and how would that increase if we were to start putting lockers, for example, in tube stations. So as you can see, if we start putting those kind of Amazon style lockers, which you might have seen in the US more, starting to become much more commonplace in the UK market, based on where deliveries typically are, how likely is it that they will fall in these catchment areas? But then also, I think the very interesting part of this analysis is, okay, perhaps these locations make sense to include lockers in first, but let's have a look at internet usage characteristics. So what they did is they actually used a data set, which is from the Consumer Data Research Centre in the UK, to look at the different segments of internet usage. So for example, perhaps e-professionals are a segment that we really would want to go after, to be able to toggle on and just look at e-professionals who typically order a lot online, and see what that looks like in relation to where you might be considering putting those lockers. So pretty interesting analysis. I won't go into too much detail because of timings, but I think it's a great example of how spatial decision-making in the due diligence process is becoming more and more commonplace. And I think it's just a great example. So final example that I have here is point of sale white space analysis for a plant-based brand. Now, I'm sure we're all aware on our daily or weekly shops to the supermarkets that plant-based is becoming a really big thing. And in this case, a fund which was trying to understand very high growth plant-based business, were trying to identify potential gaps in their point of sale network and assess partnerships if they would make sense with larger CPG brands in the market or not. And they need to understand where audiences who prefer vegan and organic food typically live and work in order to identify the most suitable distribution channels. As you might immediately think, if you live in London or you live in New York, you might be thinking right now, okay, there's certain areas of Manhattan where there are a lot more vegan restaurants because typically more vegans maybe live in Brooklyn than in another location. I don't know the quirks of New York geography, but as you can imagine, there's a lot to be said with the where of these decisions. So in this case, this is actually an example that our data science team worked on, and there's a full blog post if you'd like to see the details of this analysis. But they brought in different data sets, both in terms of POIs, per capita income, because obviously when you think about organic and plant-based, it is still, much of it is still quite high-end and quite expensive. So looking at average ticket size from MasterCard data would be relevant, but then also geosocial data. And I'll skip across to the live map here, which is actually created using our Python package. But what the data science team did here in this case was they created an organic affinity index. using spatial.ai data. And you can actually zoom into certain locations and understand, okay, how is my point of sale distribution networks? How does it look? Where should I be more actively marketing, both, mobile, out of home adverts was a big focus for this brand. And you can toggle on and see, okay, where is there a greater affinity if I just toggle off these other layers here. And we'll just look at the organic affinity index. So here we can see in Philadelphia, we can see, okay, there's a greater affinity in these locations, and therefore perhaps our sales team should be going out to these locations to identify more points of sale as partners for us. So really cool analysis and very replicable across multiple categories. So I'm coming to the end here. In conclusions, I think they probably come through in the 4 examples that I've shared, but I think PE funds are looking to hire more spatial data scientists. I think we'll start to see more and more jobs posted where we don't just say data scientists, we'll say specifically spatial data scientists. And it's a competitive market for that kind of talent at the moment. Only 1 in 3 data scientists actually have those expertise in spatial analytics. Real-time data, I think there's going to be more and more need for more up-to-date live data with COVID and all of these new normals that we're seeing, and we don't know what tourism is going to look like in the next 6 months. There's a lot of uncertainty, and so up-to-date data to follow those trends is going to be really important. And then finally, funds don't have time to waste. Typically, the PE firms that work with us are turning around analysis on a 2 or 3 week timeline. And so having those data partnerships in place, not having to speak to so many vendors and perhaps actually go through one platform like CARTO, which we have a data observatory and thousands of data sets available, allows them to not waste time on acquisition, evaluation, ETLing. You can just bring it into your CARTO account and carry out that analysis very fast. So yeah, you can see a few of our customers here. I won't dwell on that. But yeah, if you'd like to know more, please feel free to visit carto.com. We have a spatial data science and CPG and retail event next week if you'd like to join us. But yeah, if you'd like to have a demo, please feel free to drop me an email. I'd be happy to have a chat. And I think there's a poll.
Absolutely. Well, yeah, thank you for that, Flo. You mentioned their PE funds, but I suppose that they're the main target audience for our sessions and for our deep dives. But what type of funds do you tend to see using spatial analytics most? Is it predominantly PE, or is there other angles for different types of funds?
There's also a lot of equity research teams using the platform. Jefferies is a great example. They do some fantastic spatial analytics stuff. And they actually spoke at a conference we had in March about some of the specific use cases. But it's a real mixture of the kind of mid-market up through to the very large PE firms like Blackstone, KKR are starting to do really cool things in spatial analytics space. But I think some of them are moving much faster to get the kind of talent that they need to do that type of analysis. And typically those are the ones that are working with us sooner.